Hello, I'm Kamal Santamaria. This is Counting the Cost on Al Jazeera, your weekly look at the world of business and economics. This week, Iran. It's a year since the Middle East's second biggest economy signed the now famous nuclear deal, a reduction in atomic power in exchange for the lifting of crippling sanctions. But while oil and gas production quickly ramped up, international firms are still reluctant to invest, and locals are wondering when things will really improve. 1 year on, we size up who's winning and who's losing. Also this week, part 2 of our trip to California and the Global Entrepreneurship Summit. This time it's about doing business in a socially responsible way. We'll also meet an 11-year-old developer who's designing smartphone apps to shine a light on the environment and autism. Plus, a tool which helped people communicate after the Japanese earthquake and tsunami 5 years ago now makes its market debut. We'll look at Line, the biggest technology IPO so far this year. A lot can happen in a year, and certainly a lot was expected to happen in Iran a year ago when the country signed its long-awaited nuclear deal. But given expectations were so high, perhaps it's only natural that 1 year on, there is a growing sense of frustration. Iranians expected to see real economic improvements by now, and foreign companies expected to be doing business there. It's not exactly panned out that way. Let's look at the economy as a whole for a start. The IMF predicts between 4 and 5.5% growth in 2016, up from 1.3% predicted before the deal, so that's good. But given Tehran wants 8% annual growth for the next 5 years, well, we are clearly some way off that. The growth that is there is mostly due to an increase in oil exports. They have doubled since July of 2015, but pumping 2.3 million barrels of oil per day into an already oversupplied market means the returns aren't great. On the foreign investment side, billions of dollars worth of deals have been signed, but the remaining US sanctions mean they've been delayed. Firms fear penalties if they do business in Iran. Plus, there's the lack of transparency and corruption and excessive red tape, which makes the business environment tricky. And all of this means everyday Iranians aren't feeling any benefits. A recent poll was conducted by the University of Maryland. It showed Iranians are actually less optimistic now about the economy than they were this time last year.
There are plenty of deals being made in the Grand Bazaar in Tehran. But a year after the biggest deal in Iran's recent history, what's changed? President Hassan Rouhani promised economic prosperity, more jobs, more choice, lower prices and greater opportunities. A year on and the president's under pressure to deliver.
There has been no tangible achievement economically. The government is talking about single-digit inflation, but you can't feel it.
I can't say that society has experienced great economic growth, but after Rouhani took office, many good things have happened.
Free from nuclear sanctions, Iran's boosted its oil exports to more than 2.5 million barrels a day, close to pre-sanction levels, and foreign investment has increased. However, non-nuclear sanctions continue to strangle the economy. They're linked to Iran's human rights record and ballistic missile testing. It's forced Rouhani to scale back on his promises of foreign investment from as much as $50 billion a year to 15. There is a deal with Boeing involving dozens of jets worth as much as $25 billion, but Republican and Democrat critics in the US are doing their best to derail the deal. And in Iran, hardline opponents of the president have seized on the non-nuclear sanctions as proof the US was never really serious about forging a new relationship at all. The nuclear deal took effect just 6 months ago. In economic terms, it's still in its infancy. And there is confidence in Iran things will improve. It'll just take time.
Right, so let's look at what's changed and what hasn't in the past year in Iran. We're going to focus on the oil situation first with Abhishek Deshpande. He's the chief energy analyst at Natixis Bank. He's based in London. Okay, so what happened with the oil, Abhishek? Because all the talk a year ago was about Iran coming back into the market, and it's got tankers of oil sitting in the Gulf all ready to go. Oil would be Iran's saviour. What transpired in your opinion?
As far as Iran is concerned, I think Iran has surprised a lot of analysts on the street as well as the markets in the volumes as well as timeline in which it has tried to return a lot of its oil back into the market. Of course, there was a little bit more, expectation of Iran to hit far less than what a lot of OPEC countries and market analysts were expecting. But Iran has managed to hit almost close to almost close to 500 to 600,000 barrels per day already, and there's expectation that Iran could add another 200 or 300,000 barrels per day at least by year end, which is just close to its pre-sanction timeline. Iran has generally managed to add a lot of oil at a time when demand has been picking up undoubtedly, but also at a time now post-Brexit where we are questioning whether this demand will continue to pick up, especially towards the end of the year or early next year.
Okay, but what about the trickle-down effect in Iran? You know, it's all well and good producing the oil, but they're not getting as much money as they would want because of the low price. And I wonder then if there is any real trickle-down effect into, you know, business and everyday people, and really as the Iranian economy in a whole. Will there be a strong positive impact at some stage?
In one way, to be honest, it was always only one way up for Iran, one way for Iran, which is upside after the lifting up of sanctions. So yes, Iran completely understands it's not first of all on the oil side, on the outset of it, it's not first of all getting as high a price for oil that it could get or it had got in the past when oil prices were at 100. So with releasing more oil into the market, it's only putting further pressure on prices. Whether there will be enough revenues from oil that could trickle down to the other parts of the economy, it remains questionable, obviously. And we will not be surprised to continue to see their foreign reserves still coming down in the next 12 to 18 months, as also for the remaining OPEC countries, to be very honest. The lower revenues because of lower oil prices, but being offset by increased export, may still not be enough, and we would still see Iran dipping into their foreign reserves.
Doesn't all this suggest then, Abhishek, the importance of diversification in Iran? It is, according to everything you've just said, so dependent on oil and the oil price and getting back into the oil market. Therefore, part of this re-emergence from sanctions has to be about further diversifications, does it not?
I completely agree, and it's not just an Iranian situation. It's for any other OPEC countries, which is significantly dependent on only oil revenues, including Saudi Arabia. But for Iran, I'm not that concerned when it comes to diversification, because Iran, during the sanctions, when the sanctions was predominantly on crude oil exports or for that matter, even anything related to crude oil, not necessarily oil products as much, I would say, then they had already started to diversify. They had already started to do value addition to the natural resources such as natural gas or crude oil by generating a product that was not necessarily or directly being impacted by sanctions, such as, for example, natural gas conversion to electricity, and then selling electricity to the neighboring countries so that it diversifies and also gets higher value out of the products that it sells in the future, at least in the energy space.
Abhishek Deshpande, we thank you very much indeed for your time and for your thoughts.
My pleasure.
Now, also joining us from London to talk through the wider Iranian economy is Andreas Schweitzer. He's been investing in Iran since 2009 through his consultancy company Arjun Capital, which is a Swiss firm. Andreas, I'd like to separate our discussion out into the external factors, that is the sanctions, and then the internal workings of the Iranian economy. Yes. So if we start with the external ones, 1 year on from the Iran nuclear deal being cut, is Iran where you expected it to be, or is there room for some disappointment in how far it's come?
Disappointment is related to expectations, and no doubt that the expectations were very high internally in Iran and externally also. And I'm a Swiss, having been brought up in Germany, so to me East Germany comes to my mind. And if you look at that, a country that was locked away from the world for many decades, and it took much longer than one thought. And with that time horizon, personally, I'm not disappointed. I think one should just give it the time it takes, and this is probably a generation issue.
And where are we with the banking situation? Because as I understand it, this was a big issue.
The lack Iran has now is that many international banks do not want to take payments from Iran due to the not yet removed other sanctions from the US. So this hinders, of course, trade, and US dollar clearing is still not permitted, but many other currencies are: Swiss franc, pound, yen, euro, of course. There are banks, mid-sized banks without US business, who deal with Iran completely legitimately, and it's a bit of a puzzle work to find the right parties to conclude a transaction. But it slows it down, and we saw it with the Boeing deal, where the US government at the moment is hesitant.
Andres, I'd like to switch to, as I said, the internal issues of Iran's economy here, because, you know, we were speaking about this in our newsroom earlier this week, the fact that internal processes, the red tape, the things which your small and medium-sized businesses have to worry about, those haven't improved internally.
Yes, I presume everybody has their own view. All I can say, we invested in Iran in renewable energies in 2009, and the relationship we had with the government agencies we dealt with was perfectly okay. And we knew that things are different in Iran, that they would be elsewhere, and with that mindset we were not disappointed.
But maybe you've hit on the point there. Sorry, I'm going to interrupt you. Maybe that's the thing.
Sorry.
You dealt with the government, and that's just the thing. Everything is so tightly state-run. There's no real privatization there.
The difference between a company privatized internationally and privatized in Iran, that normally if you privatize a company in Germany or Switzerland, there would be very state-owned ownership. In Iran, you still have a pension fund, you have other agencies who are legitimate investors, but you are still, while you are still privatized under our understanding in the stock market, you are still more or less government-owned. And this apparatus will stay there for a while. You have to accept, if you deal in Iran, that the government is a stakeholder in the many things one does.
Andres Schweitzer on Iran, we thank you for your time this week. And still ahead on Counting the Cost, the smartphone app sending hundreds of thousands of people into the streets to look for rather adorable little monsters. Pokemon Go is coming up a little later. Right now, though, part two of my trip to the Global Entrepreneurship Summit in California. In part one, we met some established entrepreneurs. We found out what makes business work for them. This time, we're meeting the up-and-comers, particularly those with a conscience. So it's all about, you know, meeting and greeting here at the Global Entrepreneurship Summit. This is one example of it. Google's put up a corkboard. You can leave your business card there and show the world where you're from. This caught my eye, though. Our mission to connect global startup communities so that together we can work on the world's biggest challenges. And, you know, this is a theme that we've seen a lot of here, talking to people here, realizing, and this is particularly the young entrepreneurs, they don't necessarily just want to make money. Of course they do, but as important as it is to make money, it's important to make a change. They want to be part of something that is actually having a positive impact on someone somewhere. I want you to have a look at this now. It's another report from Tarek Bazley. He's showing us the impact of socially responsible entrepreneurship, in this case, in Kenya.
In the countryside outside Kenya's capital, Nairobi, few houses have mains power. But in one home, a simple solar-powered rechargeable lantern designed and sold by an American company is helping a family get more from life. Replacing expensive kerosene-burning lamps, the solar lanterns cost as little as $5, pay themselves off in around 3 weeks, and are designed to last for 3 to 5 years of daily use.
It's economical because the money that we used to buy kerosene now, it has to do something else. But now that we have daylight and we have the kitchen where Mama is cooking effectively.
The company's lanterns now light the homes of more than 62 million people. Its co-founder is one of more than 700 entrepreneurs at a global summit in California.
We need to solve the world's greatest challenges, and we need to harness capitalism to do that. In our case, our customers need clean, accessible energy. We're going to provide that with solar. And to do that at the scale of 1 to 2 billion people, we need access to tremendous amounts of capital.
Businesses have always known that to be successful, they need to both be profitable and sustainable. In the past, that's meant shareholders and customers have demanded what's called corporate social responsibility. Now, though, there's a new generation of entrepreneurs and workers that are demanding an ethical rethink.
The first thing that we want to do is to have impact in people's lives.
We have a social component. We're helping our communities. It's essential, right? Who else is going to do it?
It's an agenda some analysts say is similar to that of post-World War II baby boomers and born out of a sense of threat.
They're not as concerned about the world blowing up any moment as the boomers were. They're concerned about the world slowly deteriorating due to sort of the twin forces of economic unsustainability through income inequality. And they're also concerned, as you might expect, about climate change.
The new generation of entrepreneurs may be living by the mantra, do well by doing good. But the real test for them is to keep their investors happy, while at the same time honouring their intention to improve lives around the world.
So our next guest knows a thing or two about socially responsible investing in entrepreneurship. His name is Daniel Lubetzky, CEO and founder of a company called Kind Snack Foods. I'd not heard of it before. Very popular though in the United States, the fastest growing snack company in the United States actually, and focuses on making, quite simply, healthy foods. There's many more strings to Daniel Lubetzky's bow, as I found out in our discussion. Have a look.
The genesis of it was, I was the son of a Holocaust survivor. My father was in a concentration camp, so all the ventures that I've started, their purpose is not just to do well, but also to do good, to connect people. I've done ventures in the past trying to promote peace between neighbors, and Kind is about promoting peace and empathy in our daily lives.
Well, tell me about some of those as well, because you've got these other movements which work in the Middle East between Israel and Palestine. Just give us an overview, if you wouldn't mind.
So the first company I started is called Peaceworks, and it uses business as a force for bringing people together to shatter stereotypes and help people humanize each other. So Israelis, Palestinians, Turks, Egyptians, Jordanians, trading with one another. That's the initial venture I started, Peaceworks. We started also efforts in Sri Lanka between Sinhalese and Tamils, and Indonesia between Muslim, Christian and Buddhist women working together. But the flagship that still exists is the one in the Middle East. And then I created a movement called One Voice, which I co-created with other Palestinian and Israeli partners. I'm a confused Mexican Jew trying to get Arabs and Israelis to work together. And we have a movement that's trying to empower moderate voices, Palestinians and Israelis that are fed up with the conflict, that want to end the occupation and the hatred and the conflict, and want to have two states for two people, and they're trying to awaken the moderates to stand up against extremism. I've done many other things in terms of social activism, but my favorite thing is trying to use business and the forces of the market to do not just well, but also do good.
So there's a reason that I've gotten you to list off all these things, because as I hear them all, they are good, noble causes, they are socially responsible, but they cost money. And this is what I want to talk to you about. Where do you get the balance? Because you have to to do all of these things, you've got to make money.
Yeah.
But you want to be responsible about it as well, and not to make money the center of it all.
Well, the magic of it is when you're able to create value from the social work you do. So sometimes there are things where it's like give and take, and you're like having to sacrifice some business profits in order to advance the social good. But sometimes you're able to create magic by thinking, our philosophy is to think with and rather than or. So it's not this versus that, it's finding a way where you create a business model where they benefit each other. So Peaceworks, the more that people buy our products made through cooperation, the more that we're making money, but also the more cooperation we're advancing, so they're going tandem. And
so when you say, let me just interrupt you very quickly, when you say creating value, you're not necessarily talking about money.
For us, value is much more than just money, because this world, life is too short to just be thinking about money. You have a higher purpose. For example, when we give out Kind bars, we do it in a very sweet way where we inspire kindness. When we spot somebody doing an act of kindness, like we have these cards that I carry with me, and if I spot somebody doing the kind thing, I run towards them, and if they don't call the police and say, "Who's this weirdo?" then we say, that was really sweet what you did to this person. You seated your taxi, or you helped them carry your stroller up the stairs, and in appreciation for you doing that, you can go to this website, enter this code, and we send you a couple kind bars with our compliments, as well as a card so that next time you spot somebody doing the kind thing, you can celebrate.
You pass it on, yeah. Pass it
and what's
forward.
cool about this for me is that we have had over 1 million acts of kindness recorded through this movement.
Mm-hmm.
We've had hundreds of thousands of people join our movement.
But then does it translate into them going and buying kind bars or something like that?
Not
Again,
always.
I don't want to be capitalist about this, but in the end, one thing has got to help the other, doesn't it? The money has to help the movement has to help bring in the money.
Yeah, but I'm a big believer in karma, and like if you're doing things for the good of the world, eventually it catches up. You don't need to think about it transactionally. You never want your social mission to be a crutch to your business fundamentals. The product has to stand on its own. 90+% of people that buy kind bars buy them first and foremost because they're delicious and they're healthful, made with nutritionally rich ingredients. They don't buy them because of our social mission. But the social mission is an additional reason why we wake up in the morning and are energized. It's an additional reason why people that know about it are loyal to us. It's an additional reason why people become kind ambassadors, why we attract a formidable team that's very passionate about what we're doing.
This is what I was going to ask you. I talked to you about attracting customers. What about attracting staff? Is this now being socially responsible? Is this something which particularly young people are saying, I want this to be part of my job?
Yeah, absolutely. I mean, if you think about what we're facing as humanity with climate change, resource scarcity, water droughts, fundamentalism and extremism across the globe, lack of respect towards each other, nuclear proliferation. The only way we're going to be able to tackle these things is recognizing our shared humanity and rely on market forces to help us do some of that impact, because market forces are scalable and sustainable, so they're the best way to do so. And more I notice young people, young generations expecting from themselves and from their communities and from their companies that we don't just focus on the bottom line, on the financial bottom line, but also on trying to behave responsibly and make this world, leave it a little bit better than the way we found it.
So we're here in the International Media Center right now at the Global Entrepreneurship Summit, and we've seen all sorts of people come through here. There are media, obviously, and government officials, and lots of entrepreneurs, lots of people with great ideas from all over the world. I wasn't quite expecting to meet my next guest, though. This is Hamish Finlayson.
Yep.
He is 11 years old, and you're from Townsville in Queensland, Australia, right?
Yep.
And this young man is an entrepreneur. So tell me what you're working on.
I've developed 4 apps, 3 of which teach people about litter and what it does to the environment and oceans.
Litter?
Yeah, litter.
Okay.
Yep.
Rubbish and all this type of stuff. Which
Plastic bags. Like,
Gotcha.
Yeah. And then another one about autism, which teach people about strategies to deal with autism and like...
And you've developed that because you have autism yourself?
Yes.
So something to help out people to understand...
What it is, yeah.
Okay then. So, feeling a little inadequate here right now. You're 11 years old. How did you learn to make 4 apps?
I used this app called Game Maker to make my games. I worked on the iPad by dropping and dragging certain pieces of code to make a game. Once I finished the game, I go export it to Xcode on the Mac, then submit it to the App Store. Wait a few days and it should be uploaded.
And then what's actually brought you here then?
Mainly just developing my apps at such a young age with only the help of my dad, really. It's just really surprising they picked me.
Yeah, well done. And have you met any people here who've been interested in it, who've said, hey, maybe we want to help you out, we want to fund you here?
Not yet, but everybody's really surprised that I'm here and taking my selfies and pictures.
Yeah.
And a lot of people have been recording me and talking to me.
Of course we have, because we all feel, as I said, incredibly inadequate next to you. Hamish, it's been a pleasure meeting you.
It's a pleasure
I hope
meeting
things go
you.
well.
Yep, it will.
Cheers.
Bye.
Such a lovely young man, charmed us all there at Stanford and made us wonder what we'd been doing with our lives all this time. Now, while we're talking apps, actually, we want to talk briefly about one that's huge in Japan and Indonesia, Thailand, Taiwan, but kind of unknown outside those markets. It's called Line, a bit like something you'd get if you combine WhatsApp, Skype, Twitter and Uber. Despite its relative obscurity, Line just became the biggest tech IPO, initial public offering of 2016, when it listed its shares in Tokyo and New York this week. Why is that important? Well, tech startups have been raising money privately of late. Uber, for example, has raised billions, but hasn't gone near the stock market. It's also interesting because of the way it makes money from social media, not just from games and advertisements, but sticker sales and licensing its own characters. And if we're talking characters, we can't ignore Pokemon this week. The rebirth of the Japanese cartoon as an app called Pokemon Go has resulted in it becoming one of the most downloaded apps of all time. It uses your phone's GPS location and camera. It requires you to go out into the real world while still looking at your phone for little virtual Pokemon characters which pop up on the screen. For part-owner Nintendo, making grown adults use their phones like children has been huge. The jump in share price has pushed Nintendo's market value up to around $34 billion. Big win for the company and for the world of augmented reality. And no, I have not downloaded it because, quite frankly, there's enough jumping out at me in real life without adding virtual cartoon characters to it. And that is our show for this week. More for you online, though, at aljazeera.com/CTC. That'll take you straight to our page with individual reports, links and entire episodes for you to catch up on. You can also get in touch with us. You can tweet me at KamalAJE. Do use the hashtag AJCTC when you do, or just drop us an email. Counting the Cost at aljazeera.net is the address. That is it for this edition of Counting the Cost. I'm Kamal Santamaria from the whole team. Thanks for joining us. The news on Al Jazeera is next.